Welcome to Insights. I'm Eric. I want to do an update on the soybeans review, kind of refresh it. Some of the older ones were done with different techniques and recording techniques, and I was using soybeans as a means of teaching the evolution of the trade, and so we're going to just redo this one. I'm going to clean it up so we can see the soybeans line easier, and we're going to go and teach what the steps within the evolution of the trade for people who are just getting introduced to it. So the evolution of the trade is a trading discipline that takes us out of the equation. It follows price and time across multiple time frames. The most important time frame is the monthly time frame. And we can see here that the soybeans primary trend has been up for 5 months and it's produced nearly a 30% return. So it's another profitable trade. The problem with soybeans lies within the weekly and daily, and predominantly the daily cycles. When I say cycles, there's price and there's time cycles. So the current push, the one that's produced a 30% return, is extending the cycles in the weekly and the daily. Anything that's red means they're statistically extended and it's trouble. I mean, you're pushing the envelope. Anything past 2 is noteworthy. Anything past 3 is rare. Anything past 4 and so on. It gets more and more difficult to continue the cycle. So the daily, which is what stands out the most, has a price and time cycle that are nearly 5. It warns you not to chase, to stay out of this one, to watch it from the sidelines. Recognize that the primary trend is still in play, it's still good, but you want to stay away from jumping on board and buying like everyone else. Let the public do it, you stand aside and basically watch. Now with some of this problems that we know that this is the A&E phase right here because it's empty. The computer will assign these codes over in this left-hand side column. The A&E phase tells us that we're going to keep an eye, as long as alignment is all triple, it's a triple up, so as long as alignment's good. It's energy that we're watching, and there lies the problem. So I'm going to open up the energy charts, the ones that I can interact with in the videos. You can download these or look at forms of them inside the links in the matrix in the cloud, and you can get a gist. It really doesn't matter to fool around with and interact like I am. It just is for teaching purposes. You'll see most of these, which is the ones that you'll pull down are highlight both the bullish and bearish sides, but we're going to narrow this down and look at only the bear highlights. The bear highlights show up in these red domes. We call them blocking domes when the DIs are down below -60. The further DI2 goes, the longer this series is floating below this level, this threshold level. There's several blocking domes that have been generated, but soybeans has powered through them. We'll explain in a minute why that is likely happening, but it is one of the reasons why when you see that daily cycle extension, you don't want to chase this because the energy build is mostly negative. And if you wanted to surprise and continue to the upside for much higher than this, the energy would have to be at least above 0 and probably up in this range, and that's not something that we're seeing. So we're going to head back to the matrix here. We're going to take a look at another piece of information so we can see that the time frames, while triple up, we know the daily's extended. We also get an idea from the seasonal column where the rally will likely have trouble based on the calendar. And this is something just to keep in mind. I don't adhere to this like rock solid because I've watched continuation take off during seasonally weak periods when you have favorable energy builds or very early trends. But as the soybeans trend, maybe it resets, maybe it doesn't, but the more extended it gets and the more it approaches its seasonally weak period, the less likely you are to be chasing or even participating in resets during this period, because this is the time when soybeans tends to underperform. The other thing that I've left on this time is the geometric spiral, or what I call the natural reversal points that the computer draws out. These are geometric price targets based on price coils, highs and lows, and they're more reliable than the traditional linear forecast that you commonly see in technical analysis books. People on social media tend to quote the linear side of things. The world is geometric, so these are more realistic forecasts. And as we look at price at 20.44, we're We're really close to the second spiral, which means that this one has reached its target. It hasn't blown through it, so maybe it is primed for consolidation, which before, if it's going to go up to 25, you might need a pause, and it supports, or it's troublesome as we see these extended numbers here. These numbers are more troublesome than this number, although the weekly could reset as well, and that would require a deeper correction. The last thing I look at is the Pro and Public Index, which are found inside the Pro and Public Index links. The Pro charts are here, and you would click on this and it would come up in the cloud. You would see this particular chart. You're looking at price here, you're looking at the Pro Index, and you're looking at the Public Index. This is smart money, this is dumb money. It's not really that. That's just references in terms of like who you want to be standing with. The pros tend to sell when price is going down. When the pro index doesn't match what price is doing, it creates bullish and bearish divergences. Right now we're seeing confirmation within the rally, so soybeans looks okay, but if anything, if price continued to move higher and the pro index didn't match that rally, it would draw up a bearish divergence. It would be a warning sign. It would be something to continue to watch. We also can use the reversal systems, which the computer looks and creates. On the reversal tab, here's the current price. Everything above it is supply and demand zones, which the computer narrows down and calculates on its own, in which you're going to stumble, or it's like you're going to hit resistance. It highlights the near-term ones, both above and below. These are the lower reversals, and the weekly is what I tend to focus on. The daily generates a lot of reversals, so it gets a little bit confusing. The weekly cuts them down, and sometimes the monthly doesn't have too much information. A lot of times the monthly reversals has a lot of empty space in it. Soybeans is a really old contract, so there's a lot of information there too. But the weekly reversals is what we focus on, or I focus on in general. When we look at these numbers, you can follow them. You can run, these are something I keep an eye on. I don't have to run them down. I don't use this chart. I pull up this chart just to show you where they are inside the price trend. It's really, we're heading into the middle of this, so there's a lot of congestion here, and that's the problem. Soybeans is smashing into this congestion. Now, when we consider that the daily trend and weekly trend are somewhat extended, and we know that we're entering a congestion zone, this is where you get concerned that a consolidation would materialize. So bottom line, this says don't chase. The primary trend, we can continue to hold it, we can continue to play or basically watch, but there's no fresh money committed here. What we're waiting for is we're waiting for a reset, a letter R that shows up here, which means that the daily trend is going to have to turn downwards while these maintain and stay up. Maybe even the weekly trend turns down. It wouldn't be bad because it would help refresh this price move. But even if it comes down a bit, this number will come down and it'll relieve some of the pressure. So as this comes down, then as this flips down and price moves down, eventually it'll move back up, and then this will flip back up. It will create another triple alignment, which will mount as it will be coded as a reset. And if the energy build looks favorable or was favorable before the reset is viable, and it's something that we can chase. But I don't know that until we get there, and that's something we can watch when the time comes, or talk about when the time comes. So that's the end of this review. If you have any comments or questions, put them in the bottom of the video or contact me through the blog. Go study more of the evolution of the trade and maintain your discipline. Until the next review, have a good day.